Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So we start from the weekly chart because actually on the intraday charts currently we do not see something really interesting. So market is just moving lower without any response to the support that it has reached. So take a look that on the weekly market mostly has hit the confidence support that we discussed already is monthly and weekly confidence. So we talked about it in the weekly report. That's very strong support area. But here we intend to use the one cunning thing. So it's a trick moment because, well, it's important for position taking. And usually when you plan to take the long position, you will try to use this stuff on many markets. And gold not an exception. In fact, in gold it happens very often and when it's working. So take a look. Initially, we talked about this ABCD pattern. Its OP stands 1648. It's absolute OP based on the absolute A top right here. But if you'll take a look at the weekly chart or even on daily, you will see that real downside action started from the bit lower point right from here. That's why it could happen, and on the gold market it happens relatively often, that market is not reaching the major ultimate OP at the 1648 or 1650 and turning up a bit earlier. And for a position taken, it would be better to take the position a bit in advance of the reaching the real OP target. That might happen by different reasons. One of them is a lot of competition between the orders around the major point, because everybody see the A, everybody could calculate this ABCD and estimate that 1648, well, probably I could try to jump in around 1650. And $1 ahead of the OP, taking into consideration the spread, bid-ask spread, and competition around the level. But we intend to consider this point as the starting of the A. And from that standpoint, you can see this OP mostly has been met. 1673, low here was 1676. So in fact, market has already completed the point that should be used for those who intend to go long. When you intend to go short, you apply the same thing, but on the ABCD upside retracement. At the same time, when you consider taking the long position here, the stop placement has to be below the ultimate OP area. So market should not reach. Currently, it may be not as important since market sensitive or sold, and you could try to find some other areas where you could place the stop. But in general, that's the rule that you could use to make you some advanced and advantage for position taken in the current circumstances. From that standpoint, I would say that OP mostly is reached, at least for the purposes of the taking the long position. On the daily chart, another pattern that we have that has not been reached yet is the 1618 extension of the bottom line, which is 1643. That's also the area where you could hide your stop, so somewhere below this level. Also to consider it also will be the daily result as well. So that's approximately how we could use current situation for position taken. Speaking in general, here are the same problems that we see right now on the dollar index and on the euro currency. We see the acceleration on the CD leg. It means that beyond of this pattern stands some significant fundamental changes in the economy that push the prices significantly lower with the acceleration. And acceleration on CD leg, it means that sooner or later, but market should proceed lower to some XOP target. It means that from this area, the only thing that we could count on is just the retracement. Whether this will be deep, whether this will be small, but most probable that it will be just a pullback, just a retracement. In most cases, that should be somewhere at the 30% maybe pull back somewhere to the 18 even. It's probably minimal pullback that we could consider. Ultimately, it could be just the 1760, so retesting of these lows. But that's probably the minimal area somewhere around 1765, 18 even. This market should hit on the bounce. Hopefully, that will be a bit greater. It's classical 30% pullback on the whole downward action. This would be nice for those who are taking the long position. Additionally, that we could say it's about interest rates. So take a look at on treasuries. We see starting on some downside action as well. So here market is completed there. As you can see, there is divergence right here, and interest rate starts to fall. The pattern that we intend to consider, if you remember, it's daily chart. It might be the Brent double repo sell. That purpose, market needs to show the significant downside acceleration and close below the 3x3 moving average. Previously, the close and drop should be somewhere back to the lows right here. So we have close above, close below, new top, market trying to challenge the stop, just push price higher. Even if it will be, if bears and bulls will be defeated and market just collapse right back down, this will be great sign for reversal on the interest rates, and that will be great confirmation for taking position of on the gold market. So this cross market analysis that you could also keep an eye on. So that's what we would like to say about the gold right now.